Hey, Happy New Year, everybody. It's Paul Obrantz with this year's first week in interest rates. If buying a home in 2026 is on your goal, or if you've already bought a house and you're waiting for that right time to refinance, you want to watch this video. It comes out every Monday morning where I talk about what happened last week with interest rates, and what is things that you should be looking out today. Remember, rates change on an hourly basis. One of the biggest misconceptions out there is when someone gets pre-approved or they see a rate in a newspaper that a rate is stagnant. That's not true. Rates are continuously moving. So you want to make sure that if you are looking to buy a house or if you are waiting for that refinance, you have the most up-to-date information and know exactly what to look for. So a lot of great stuff here. One of the things that I would love to first reintroduce this year is my YouTube channel. There is so much misinformation out there. So we're putting a lot of effort into my YouTube channel to make sure that you have access to, well, first of all, this weekly update, and tips and strategies. Like, for example, if you're looking to buy a house but you have to sell yours first, I have a video in there that talks about 5 ways to buy before you sell. Lots of great information in there for you. So where are we at here? Let's go ahead and let's dive into this week's first weekly interest rates here. So let me just kind of stagger it here like this. Number one, I'm really excited about in the week of January 12th. We're coming out with my 2026 rate forecast. This is going to be something you don't want to miss. Last week, I shared with you what season, meaning winter, spring, fall, summer. That I know that wasn't in order, you guys. I think it wasn't in order. Anyways, what season is the best time to buy? Now we're going to talk about what the rates are going to do. Should you hold off on buying? Should you look at buying today? I can tell you, if you watched my video from last week, buying today, meaning in the winter, right after the holiday season, is going to give you the best price or best appreciation model over the whole year, over the next 12 months. Rates, they're staying steady. They haven't changed much. You're going to see this ups and downs as we progress through the week, but again, VAs at 5.375 as well as FHA, conventional 5.75, jumbo 5.875. Now, these rates are shown with 1 point simply because in this market, where we're at with houses sitting a little bit, this is a great opportunity to have a seller buy your rate down. If you're looking at any long-term finance forecast, rate forecast, rates don't look much lower than this. I know I'm kind of giving away my forecast here, but this is such a solid opportunity right now with where rates are at and with this appreciation push that that has come over the last 3 years, and no evidence suggests it shouldn't happen again this winter. Last week, we also talked about, if you've already bought, knowing what your target rate is. What a target rate is it's that rate where if you did not lock in and refinance, you would totally regret it. The truth is, we all want the best interest rate out there. We all want the lowest interest rate, and we're trying to time that market perfectly. But here's the thing, you don't know when rates are going to shoot back up. So the target rate is designed to, once that rate comes, we get you locked in and we set it and forget it, and we get you saving. Our first update of 2026 is we're going to discuss a little bit about the Fed's minutes. Remember, it's not necessarily what the Feds do. It's more important about what they say and how it impacts interest rates. Before I get into it, just recall that the kryptonite to 30-year fixed rates is going to be inflation. The Feds are really mixed still on inflation, which is hard to believe. They do believe that inflation is going to come down near that 2% target rate. It may take some time simply because of tariffs, because of housing costs, but eventually they do believe it's going to get there. Another thing that they're all starting to see is that the labor market is not as strong as they once believed. The job market impacts inflation because the more you have to pay for your employee, the higher the cost of their services or goods that are going to be passed on to you. So it impacts inflation. Now, I want you to remember this as we talk about what's going to happen this week that could really move the market, and it's going to do with employment. Case-Shiller came out last week. Remember, Case-Shiller measures national appreciation of home values or depreciation, over the last couple months. Let me make this a little bit bigger for you here. In July, it was 0, August 0.2, September 0.2, October 0.4%. Year over year, we're seeing that steady 1.6 to 1.4. Now, remember, if you're looking to buy in specific areas, we do have appreciation calculators that I can send you. We're expecting single-digit appreciation around the Bay Area. Oh, there's my dog, came to join us, around the Bay Area, and great wealth can be accumulated through single-digit appreciation. Let's bring back nationally, month over month, 0.4%, year over year, 1.4. The 20 city top city index, year over year, it's up 1.3%. Now we're gonna switch gears here real quick, and we're gonna go into pending home sales. Now, an index level below 100 implies existing home sales. Let me make this bigger for you so I can see it. Our sales are less than 5 to 5.5 million annualized. You can see it's slowly starting to build momentum, and that probably has to do with interest rates coming down and housing becoming more and more affordable. Now, keep in mind, though, when it talks about affordability with homes, interest rates is not the only key factor. You have homeowners insurance, you have property taxes. These are things that we're starting to see, especially in the homeowners insurance range, start to creep up, as well as making home buying just a little bit more expensive than it has been in the past. Maybe a lot more expensive. Maybe I shouldn't use words like little or that. Okay, what's on deck this week? I talked about the employment. We have ADP coming out on Wednesday, weekly job claims, and JOLTS job reports. These are all things that can 100% move the market. And if there's any major shifts in the market, you can count on me to get you that information in a timely manner. Now, if we're not working together, or if you're not ready to get pre-approved, or you're waiting for the right time to refinance and you want to put a plan in place together, but you don't want to pull your credit and go through all that hassle, we have what's called a hopes and dreams conversation. There's a QR code right there. Just click it. It takes you right to my calendar and book an appointment. It's no obligation. It's free. We're not going to pull your credit or ask for any documentation. Just use my 20 years of experience to help you and your family put a plan in place together to save money on your refinance or your next purchase. All right, that's it. I hope you guys have a fabulous week. That's Paul. My name's Paul O'Brien. Clear to Close.